Hi there, welcome to Kneppy Invest, and welcome to June 17, 2024. Even boring days deserve an ASX daily rundown video, and today, June 17, 2024, definitely can be considered a boring day when it comes to announcements. Nothing really exciting was released today by any company on the ASX. Well, maybe I'm being a little bit harsh by saying that, because I did come up with the top 5 announcements of the day, so wait out for that part of the video later. But because today was boring, and I am being a little bit harsh by saying that, I didn't even look at Twitter. So what I'll do in today's video, I'll start off by answering a few of your questions because I am falling a little bit behind by answering and replying to your comments. Thank you, Zoom, for destroying my 1.5 hour answer reply video on Saturday. And that means I'm a little bit more behind than I'd like to be. So we'll do that, or I will do that. Then we'll have a look at the ASX today, including the best and worst performing sectors, indices, and companies. And then we'll have a look at those top 5 announcements of the day. And if I have time, and I don't see why I won't have time, I might have a look at a few charts. What charts? I have no idea at this point in time. So let's start off this particular video answering a few of your questions. And in fact, what I'm going to do is go straight to the last few questions that were, or comments that were released on my channel. First one's from Liam Jones, only 3 hours ago. So midday. What are you doing at midday, Liam Jones? With lithium prices dropping, why does a major player, Pilbara Minerals, and I like this because we can have a look at a couple of charts here, Pilbara Minerals, and the reason that's interesting is because I actually did not focus on Pilbara Minerals chart yesterday, but I had a look at it. And I'm not sure if Liam Jones is absolutely correct here by saying it's down for 19 days straight. He's not actually saying that. He just says downtrend for 19 days. But the one thing that did stand out when I look at Pilbara's Minerals chart is the share price has decreased a fair bit over the last few weeks. Yet, a smaller player, South32, continues climbing. Now, I'm not sure if I agree with South32 continues to climb because even the share price of this company has dropped a little bit. And the other question I have with this particular question is whether South32 is a lithium player. So, what I'm going to do is I could go to the South32 website and I might do that. But what I'm going to do is I'm going to go to the company's most recent annual report. And in the annual report, probably released last October sometime, it's going to be fairly big. There it is, 193 pages, September, 8th of September last year. And the company's annual report should tell us what they do. We already know South32 is a miner, but what exactly do they mine? They do mine quite a few commodities. Now, the other thing I could do, oh, it's open up. I thought it was going to open up really slowly. The other thing you could do is just go to the website. Isn't that right? Just go to the website, South32. And on their website, they actually should tell you what they do. Here it is, what we do. There it is, right at the top. Our commodities. Do I even have to go to the annual report? So these are the commodities this company mines. Aluminium, alumina and bauxite, copper, nickel, manganese, zinc, silver, lead, metallurgical gold. Notice there's no mention of lithium. Now, maybe they are a lithium explorer, but they're not, according to this, a lithium miner. So there should be not much relationship between Pilbara, which I'm pretty sure is a pure lithium player, and South32. So if you do like South32, or you do like any of the commodities they're mining, or you like a few of them, this could be a good company for you. So there you go. That's one of the reasons why there's a bit of disconnection between Pilbara Minerals and South32, Liam, is because, yeah, South32 is not a small player in the lithium market. Now let's have a look at the charts. So Pilbara Minerals, PLS. Oh yeah, oh gee, the chart is horrendous. What's happening with Pilbara Minerals? Jeez. This is sort of fairly, I wouldn't say common among mining companies, but we have seen quite a few mining companies fall like a rock over the past few weeks. In fact, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days down, and only maybe 3 or 4 days up out of the last 19 or 20. and the share price has fallen from $4.20 to $3.15. So we are talking about a 25% drop in share price in a fairly short period of time. Share price is at a very important level I'd say even a zone. So what I mean by level is if you just take the last lows, the real big low we saw back in December 2023, that was right at these levels. In fact, that low was $3.10 on a daily share price rose 5.6%. So there was a nice little rebound when Pilbara share price hit that low of $3.10. Share price now for Pilbara is $3.14. Today, the share price low for Pilbara Minerals was $3.10. Remember, that was a low back last December. So technical analysis does work. And the reason why we have seen a little bit of bounce is because there's a lot of traders, investors out there who know for whatever reason that Pilbara Minerals share price got down to $3.10 in December. And they see the share price back at these levels right now. And they go, oh, great time to buy. It's back to these levels. Or maybe it's investors who saw the share price bounce after it got to $3.10 last December and thought they lost their opportunity to take a position in this company. Now they're seeing their opportunity of taking a position. So Pilbara Minerals as it is at a fairly important support level right now. If you look at the weekly chart, it's looking weak, isn't it? Starting to look weaker. So I wouldn't be surprised to see a little bit more weakness in Pilbara Minerals chart, particularly if we don't see rebounds in lithium prices. Let's have a look at South 32, right? Now, South 32 has not dropped like Pilbara Minerals, but we have seen a little bit of a drop. Share price has dropped from $4 down to $3.66. So we're talking about a 9% drop in share price over the past 2 weeks. So it still has been a drop, but nothing like Pilbara Minerals. So obviously, what drives South 32 share price is those commodities. Aluminum or aluminium. God, I always say aluminum. Aluminium. Alumina, bauxite, copper, nickel, manganese, zinc, silver, lead, and metallurgical coal. Now, another thing you could do is just go to the annual report, and I would say it's, here we go. So diversified portfolio with bias to base metals. They've got all the locations of their mines as well by commodity, and also the key commodity underlying EBIT. So probably a little bit more information in the annual report because it is 193 pages long, so you should get more information. So I do like the annual reports, but the website, company's website's fair enough. Anyway, so that's what's happening, Liam Jones. And by the way, South 32 has been looking good. I am trading South 32 now. So I have started to wind down and be more selective when it comes to mining trades. So I don't want to do as many moving forward, but I will still trade mining companies, but again, a little bit more selective. And one of the reasons is because mining companies are complete price takers. And if the underlying commodity goes up, share price of the company will go up. If the underlying commodity goes down, the share price will go down. So if there's real big sudden weakness in the mining sector, every single mining company will be negatively affected. And we have seen South 32, even though it looked like it was breaking out, a little bit of weakness in the mining sector the last few weeks. Share price has pulled back about 10%. So thank you, Liam Jones. I'm just going to like that, and then I'll put a link to this video. And I'm going to keep it to just one question in this video because this particular answer has gone a little bit longer than I would have liked. So unfortunately, Nice and Lincoln Caroline, and they're actually both talking about my trading view. Would it be okay to show how you set up a 3-month high in trading view? Actually, I can do that later in the video. How's that? Nice. When I do charts, if I remember, I'll talk about that at the end of the video during the chart session. Now on to the ASX today. I'll just upload this, not upload it, reload, just see what's happening. And yeah, resources down a little bit more than when I started this particular video. Okay, so let's have a look at the different sectors and indices, what's down and what's up. IT down a fair bit, 1.53%. Energy down a fair bit as well. And sort of like a bifurcated market, isn't it? 6 sectors up, 5 sectors down, but those sectors down are down big, while those sectors up are not as up as much as the best performing down sector, which is materials, down 0.6%. Best performing sector, telecommunications, up 0.54%. So, funny enough, more sectors are up than down. Now, if you look at the indices, gold's had an okay day, banks had an okay day as well, and bad days for resources. So gold's a little bit different than resources. You sometimes see that, don't we? Sometimes see gold having a good day and the rest of the mining community having a bad day and vice versa. So let's have a look at which, so communication services or ordinaries has had a good day, gold, or ordinaries gold, sorry, utilities. So let's have a look at the A's, and the worst performing sector is IT, yeah, and energy and emerging companies. So let's go back to the ASX 20. I just want to see which big companies have performed well today. So down slightly, down 0.06%. So I'm assuming, we'll say 9 companies in the ASX 20 are up, 11 are down. 9 up, 11 down. Oh, a little bit different. 7 up, 13 down. And without even looking, I totally forget which sectors had a bad day, because bad memory again. So I'm going to say Telstra's up. A few of the banks are up and down. So WiseTech's down, REA Group's down, maybe Aristocrat, definitely some of those energy companies down. So Woodside, Santos. So those are probably the worst performing companies. Best performing company might be Telstra. Who knows? Or maybe a few of the banks. So let's have a look at the ASX 20s. And the best performing ASX 20 company is Aristocrat. Oh, I was completely wrong there. But Telstra did come in number 2. And we also have Woolworths, Westpac, National Australia Bank, ANZ, and Macquarie Group. So, and then Commonwealth Bank. So all the banks are in the top performers of the day. Worst performing companies, WiseTech, yep. Santos, Rio Tinto, Woodside. So some of the companies I thought would have performed badly today have performed badly, including WiseTech. Okay, so let's have a look at the best performing companies today and the worst performing ones before we move on. And the best performing company, a company that did make it into my top 5 announcements of the day, Schrole Group, up 178%. Markup is $16 million. So we'll have a look at that company. There is a takeover bid for Schrole Group. So hopefully you're a shareholder, but I'm not sure why anyone would have been a shareholder of this company, to be honest with you. Maybe I'm being a little bit biased, but I have had a look at this company in the past and I've completely moved on after I've had a look. But you've had a good day. Take your profits and run. And few other companies here, but they're all on low turnover. I'm trying to, and I think it was Rich Resources. Did this company recently list? Maybe it was another company. Nothing else here of interest. Now let's have a look by market cap. So while Capral Health and another company did make it into my top 5. And the reason I said Capral Health and another company is because there's a relationship between these two companies. And there is a reason why Capral Health is up 10.2%. Anything else here? No. All Integrated Researchers had a good day. That's good. Oh, Credit Clear is there. Credit Clear is another company that made it into my top 5 announcements of the day. Came in number 2, by the way. Capral Health came in number 1. And the other company combined with Capral Health, while Schrole Group came in number 3. So I've only got number 4 and number 5 to see if they made it into this list. Well, maybe not this list. Hint, hint. Well, the company that came in number 5 won't make it into either list, I believe. But the reason I want to include that company into the top 5 announcements is what they did today and what they're going to do with what they did today. I'm trying to be as subtle as possible there. Okay, so I'm hoping company number 4 came into the top losers. And there it is, number 3. Australian Gold and Copper, the third worst performing company today, are down 22.8. The number 1 and number 2 company, worst performing companies, are on very low turnover. So kind of completely bypass those. A company that didn't make it into my top 5, Anax Metals, did a couple raising, down 22%. I completely expected that. I think I mentioned this company in one of my videos last week. They went into trading halt for a capital raising, and I don't think the management did not time that capital raising to perfection. And anything else here? No. Oh, DXN is down. That's interesting. So if I see a little bit more weakness, I might buy some shares in DXN Group. It's been on a rally. So I've got one chart to show you, DXN. So if I can remember now, that's interesting. I've been waiting for a bit of a pullback for that company, and it looks like it's happening. And listing the top losers by market cap, Vulcan Energy down. ooh, to be honest with you, if you have a look at a lot of these companies, we've got lithium energy, quite a few energy companies in here, which makes sense because energy had a really bad day. So Berkeley down, Elevate Uranium down, Aura Energy, Helios Energy. So actually quite a few uranium companies in this list. So uranium prices might be down a little bit. Okay, and that's about it. Okay, so let's have a look at the top 5 announcements of the day. A few companies did not make it into top 5. Those include Capral Limited. It's down. I think they made an acquisition, Apple Aluminum or Aluminium in Brisbane. Another company that did not quite make it into top 5, Close the Loop. Share price is flat. A business update, but there was no numbers in this business, just what the company is doing. So I got a little bit excited when I opened up this announcement because I thought they would be giving us some financial details of how they're performing, but no. So unfortunately, Close the Loop did not make it in top 5 announcements of the day. And then I mentioned Anax did not quite make it into top 5. If the day was a little bit more boring than what actually transpired, I think Anax would have made it into the top 5. But they did a couple raising. And in fact, I'll have a look at all 3 charts of these companies. And we'll start with Anax. And I mentioned I think they timed it wrong. They should have done the capital raising when the share price went on this massive hike, but they waited till the share price had dropped a lot. Now, one of the reasons why the share price might have dropped a lot is because the market was waiting for capital raising, and the share price is moving back towards where it started. So this is like a very small Matterhorn. Sort of the Matterhorn pattern we have seen over much larger periods with tech companies, particularly non-profitable tech companies. And a good example of that would be, what's an example? We'll say Team, which is Atlassian. If you look at the weekly chart, actually just the daily chart, there is the Matterhorn pattern over a much longer time period. And yeah, that's Anax. Capral, daily chart for Capral. Share price has dropped a little bit. 3 big down days in a row for Capral. And the chart, it was looking okay, but, well, for a period here, from about August through to maybe sometime start of this year, the chart was looking pretty good, but definitely not now. And the other one was Close the Loop. I've been following Close the Loop for a long time, but really the share prices or charts just doing nothing at the moment. Really, the share price is going sideways, and it's been going sideways for a while. In fact, more of a downtrend than uptrend over a long period of time. Not too long, because the company hasn't been listed that long, listed in late 2021. And even if you look at the weekly chart here, share price has done nothing. Okay, let's go to the top 5 announcements of the day. Coming in at number 5, we have Infratil, a company I actually am interested in for just, if you want a nice income growth story, Infratil could be for you. Just wait till we look at the chart. They went into a trading halt today, so share price has not moved because they're doing a massive capital raising. When I say massive, I'm talking about massive. 1.15 billion. Now this is New Zealand dollars, so that equates to maybe 5 Australian dollars. I'm joking, by the way. So 1.15 billion New Zealand dollars, which is a little bit lower in terms of Australian dollars, equity raising. So this is a really massive equity raising. I wonder what the biggest equity raisings on the ASX have ever been. Or this is a New Zealand-based company, by the way. That's why they're talking about New Zealand dollars. So why are they doing a capital raising by that amount? So are they doing an acquisition? Now, there is one reason why I'm interested in this company and one reason alone. This is an infrastructure company, but they are into data centers. So they have announced approximately, which is interesting wording there, 1.15 billion. So that opens that up to raise even more money if they have a lot of people wanting to partake in this capital raising. So they're doing this raising to fund further investment into data center operator CDCs, accelerating growth as well as provide more flexibility for growth across Infratil's global portfolio. There you go. So the CEO, Jason Boyd, said Trans-Tasman data center developer and operator CDC has been one of the company's most successful investments, with the stake currently independently valued at 4.4 billion New Zealand dollars, 10 times what was first invested in 2016. So that has been a great investment by Infratil. So that's why I'm a little bit interested in this company, because their exposure to data centers. Now, I have heard some people poo-poo data centers, saying, well, there's no moat. Anyone could build a data center. Well, if you got $1.1 billion, yeah, maybe you can build some data centers, but not everyone has that money. Anyway, so yeah, it's a capital raising to help build more data centers, and this is definitely a growth area in the world over the next at least 5 years, maybe even more than that. So let's have a look at the chart for Infratil. I haven't even, actually didn't look at the capital raising price. It's one thing I didn't do when I actually opened up this. I wasn't cared about the capital raising price. Okay, so that's in New Zealand dollars, $10.15, 6% discount to 5-day VWAP. So it's not much of a discount. Oh well. I don't think the share price is going to drop all that much. So this is Infratil weekly chart. That's a fantastic chart, isn't it? This is an absolutely wonderful chart. The sort of chart you want to see if you're a long-term shareholder. It's been listed on the ASX since 2010. Share price has increased from below $1.50 to $10.06, and just keeps on going up. And anytime you see a little bit of a dip, that's the time to buy it. And so dip, so COVID-19, a bit of a dip in June 2022, maybe even this little bit of a dip a couple of months later in October. And we haven't seen any sort of dip since then, any major dip anyway. So this is a company I'm following, and I'm waiting for a dip. I was hoping we are going to see that dip recently, but it didn't happen. And I don't think the company's that expensive either. It says a price earnings ratio of 10.4, dividend yield 1.84. So not really income play, but I would expect that dividend yield on your initial investment, if you bought some shares right now, to increase over time, unlike the banks and Telstra and even Woolworths. I wouldn't expect those dividends to increase much over time, but I would expect this company. So it's definitely an infrastructure play on the ASX, and I think they're in the right space, or moving in the right space. Coming in number 5, we have Infratil. Coming in number 4, we have AGC, Australian Gold and Copper. So I saw this particular announcement. Achilles returns widest high-grade zone to date. Now, this has been a sort of a market darling on the ASX the last month or so, although I haven't looked at the chart recently. And I thought, oh, mate, they're changing the company name. Change of company name for major shareholder. That's a weird announcement title. Are they changing the name just because of the... Oh, no, the major shareholder has changed its name. Okay, that makes sense. Okay, I got a little bit confused. I thought they were changing the company name before a major shareholder. So they're changing it from Australian Gold and Copper to something else because this major shareholder wants them to. I don't know why they would do that. Anyway, I'm not going to even open up this particular announcement because most of the jargon, I wouldn't say goes over my head, but sounds okay. Returns widest high-grade zone to date. Sounds pretty good. Well, the market doesn't like it. Down 21.52%. But is this because of the announcement, or is this just shenanigans with the market, which could happen with companies like this? Because the share price of this company has been quite volatile recently, and I wouldn't be surprised to see this bit of a plaything for day traders because of that volatility. Look at that volatility. Now, that is a weekly chart, so let's go back to the daily chart. So heaps of volatility, massive rise in the share price, and yeah, it's a plaything of the day traders. I wouldn't even be thinking about buying shares in this company just yet, because share price could go either way. It could go significantly higher, could go significantly lower. It is in a support level right now, a support zone at around about 30 cents. If it goes below about 28 cents, it would be a bit of a sell. So that's AGC. I was going to write it down, but I've written it down already. So right now could be a sneaky trade and a low risk trade. You could buy some shares right now about 30 cents, if it was 30 cents. It's gone at 31. And then it's been as low as 29. And then if the share price falls below, say, 28 cents, that would be fairly bearish. So sort of a low risk trade here with Australian Gold and Copper. And who knows, this could be a little bit of a buy the dip situation for the company. And that's the main reason I wanted to include this company, because share price had fallen and it was a big fall. And I just wanted to have a look at the chart because I haven't looked at the chart for this company for a while. So coming in number 4, we have Australian Gold and Copper, AGC. Coming in number 3, we have the company that's been taken over. I would be shocked if many of the listeners of this channel hold shares in this company, but up 178.13% on a takeover bid. So Schrole agrees to scheme arrangement with TES Global. And I will open this up, and what I'll do is we'll have a look at the company's most recent cash flow report. This company has something to do with education. That's all I'm going to say about it. So let's have a look at the About section. Provides global human resources software service targeting teachers and educational organizations. There you go. So it does sound okay. Software as a service, software targeting teachers and educational organizations. But I've been following this company for maybe 3 or 4 years and not much growth. They were operating cash flow positive. There you go. So $1.6 million in receipts. But if you look at their receipts history, not much growth. So not sure why this company wants to be taken out or why someone wants to take this company out. So this is the annual cash receipts rolling 4 quarters. Now, this makes me a liar, but it says 7 million, but this particular quarter was 1.6 million. So it has been increasing, I suppose. And they have become operating cash flow positive on a rolling 4-quarter basis. So why do they want to sell out? Why have they agreed to this particular takeover if it looks like the company is moving in the right direction based off these numbers? So cash price of 48.5 cents, a 203% premium to the closing price of Schrole on the 14th of June. There you go. And a premium of 160% to the 30D VWAP. Now, if I was a shareholder, I'd be selling almost immediately because who knows what's going to happen to the takeover bid. So what I'm going to do is just show you the chart. What was it? Ticker SCL? Yep, SCL. And yeah, the chart looks so horrendous, doesn't it? So there's absolutely no reason just based off the chart. Maybe the only reason to be holding shares in this company is if you're hoping for a takeover bid. And I tell you what, who said it? I did hear this the other day. Hope is not an investing strategy, and that's a really good saying. You shouldn't buy a position in a company because you're hoping it's going to be taken out. Now, I have heard some people do that, use that strategy, buy some shares in a company on the hope that it's going to be taken out. That would have worked for this company, but yeah, it might not work, and the share price could keep on dropping and dropping. Now, in saying that, they did. Looks like they are turning around their business. Anyway, I'm being a little bit harsh on this company, it seems like. Anyway, that's Schrole Group. Looks like potentially no longer on the ASX, which might be a problem for the ASX because no one's listing. There's no IPOs. But the ASX is not concerned. They think it's just cyclical. They think it's going to return. Maybe they're right. We'll get more IPOs. Well, Gumani Gomez is listing soon, isn't it? Aren't they? So that's coming in number 3. We have Schrole Group. Coming in number 2, we have Credit Clear, a company I've featured a few times on this channel now. I've never been a shareholder, but they released an announcement. Further upgrade to financial year 24 guidance. Now, if this was the first time I've looked at and talked about Credit Clear, this could have come in number 1 because this is the sort of announcement I like. And maybe if the market reacted a little bit more positively, this could have come in number 1, but the market hasn't. So this is an upgrade, and I love upgrades. It tells me the company is performing. It tells me the company is performing better than management expectations. Now, it wasn't a massive upgrade. I'll be honest with you. So they talked about revenue and underlying EBITDA, so not really profit. So none of those are profits, and I do prefer a profit upgrade, that sort of thing. Anyway, revenue is expected to be up at the upper end of the guidance. So it's not really an upgrade. They're just honing on their guidance. So revenue is expected to be more towards 42 million than 40 million. So it's not really an upgrade. And financial year 24 underlying EBITDA guidance is up from in excess of 3 million to in excess of 3.7 million, representing a 23% increase in minimum expectation. So I will give him that. I will give him that this is an EBITDA guidance, because if you're being conservative and saying, well, the worst case scenario, only $3 million of EBITDA. Now, worst case scenario, $3.7 million. So I would agree this is an EBITDA upgrade. The guidance upgrade, and I like it when companies put in reasons why a company is downgrading or upgrading. And they've just mentioned margins. So upgrade reflects improving underlying EBITDA margin, which is a key focus in expectation in the company's continued growth. So not much growth in revenue, but because of those margins, increase or better margins, increase in underlying EBITDA. So let's have a look at chart for Credit Clear. So Credit Clear helps with a company's receivables, or is it payables? One of those things. Collecting receivables, one of those things. So interesting area. And I think this will be a trouble moving forward, particularly if we go into recession. People will more like, or companies will more likely wait. Maybe not wait. Maybe that's not the best word, but they will delay paying their what do you call it? Their costs. Their what you know what I mean? Yeah, paying their bills. That's the word, paying their bills. Okay, so Credit Clear's chart was in a downtrend. You can see this well-defined downtrend. There's no debate. So from late 2022 to probably early 2024, share price in a well-defined downtrend. Now, the downtrend was showing signs of coming to an end towards the end of 2023 into the start of 2024. You can see sort of a basing pattern happening, share price going sideways. We started to see a bit of an increase in volume. Well, the real big increase in volume was in May, June of last year. That was a sign that the bottom was reaching. One of the things I will look for when I do see share price in a downtrend is increasing volume. If you see increasing volume, and if the company hasn't released anything negative, that's a good sign that there's increasing interest in the market. Share price has dropped. There's more value in this company. So hopefully value investors are saying, wow, there's value in this company. I think I might buy some shares at 20 cents. And then we see the long term, and when I say long term, we're talking about almost 1 year, share price went sideways. Share price started to rally in February or March of this year. There was a really nice day on the 16th of February. That must have been the results day. Share price on that day rallied 17.5 cents. And the share price has gone sideways since then. So this could be another consolidation period. So I was hoping this could have been a breakout for Credit Clear. Now, the market cap of this company is $100 million right now. So even though this is an upgrade and those numbers might look okay, a lot of growth has already been priced into this company at $100 million. If the market cap of this company was $10 million, I would be really interested in Credit Clear, but it's not. It's $100 million. So coming in number 2, we have Credit Clear. Coming in number 1, we have two related companies, and that is Capral Health, up 10.2%, and Integral Diagnostics, down at 3.9%. So one company's up a bit, one company's down. Why is that? And the reason behind that is because of a merger. Oh, it's a merger. They're calling it a merger, which is interesting because I thought this was a takeover. I thought Integral Diagnostics was taking over Capral Health. So they're in the same sort of field, doing medical diagnostics. Anyway, I thought this was a takeover. I thought it was a takeover, and I think probably in a way it is that Capral Health shareholders will get Integral Diagnostics shares for a certain price. That's the way I think. Let's have a look. Proposed merger, okay. Under the under the I can sometimes I can't speak English. That's okay, but most of the times I can. Under the proposed merger, Capral shareholders would receive 0.12849 Integral shares. Why not just make it 0.13? Come on. Per Capral share, implying a 63% pro forma ownership of the combined group for Integral shareholders. So Integral 63%, Capral 37%. I'm calling this a takeover. Okay. The merger ratio, I've never heard of the merger ratio. There you go. And they're saying the proposed merger is expected to deliver double-digit pro forma EPS accretion to Integral shareholders in financial year 25. I always view those sort of statements a little bit warily because it doesn't always happen. Let me absolutely say that. So these sort of companies do diagnostics, imaging, that sort of thing. What do you call them? The machines, I don't know what you call it. I very rarely go to the doctors and stuff. Leading provider of medical imaging services. Pretty sure that's what I said. Leading radiologists and diagnostics imaging specialists. There you go. I was on the right path. Okay, so one of the other reasons I decided to put these two companies at co-number ones is because of the Integral Diagnostics chart. This company's chart popped up to my screener last week, which is interesting enough. Capral Health did not. So let's have a look at Capral Health's chart. This is a company I did research on about 7 years ago, I think. In fact, let's have a look at the weekly chart. Nothing much happening with the daily chart. Weekly chart, nothing much happening. Here we go. Actually, 10 years ago. Well, I thought it was not that long ago. And you can just see what happened with Capral Health's chart between 2013 and about 2015. Share price went absolutely bonkers. Yeah, I didn't realize it was so long ago. Oh, a Matterhorn pattern. Yeah. In fact, this is a extreme Matterhorn pattern when the fear is much more powerful than the greed. So when you go up the mountain, it's more of a slower ride, but down the mountain, straight down, falling off the cliff. Anyway, so I can't remember what happened with Capral Health, but yeah, the share price dropped from $1 all the way down to 12 cents in a fairly short period of time. So I did some research in this company way back here, but nothing much came of it. And maybe I'm helpful. I'm glad nothing came of it because back then I would have been looking for long-term holds, and I'm glad this was not a long-term hold because share price has not reached those heights again. In fact, I'd say the chart for this company is just looking meh. It's just a disappointing chart. Okay, so the reason why I was interested in this particular takeover is because of Internal Diagnostics. So their weekly chart, let's have a look at the weekly chart first. So it's been around since, must have listed in 2016. Yeah, it's about 2016. And from 2016, or just after they listed, all the way through to 2021, actually, the chart looks really good, much better than Capral Health. Share price of this company went from about $1 up to $5.40. But since those heights in the share price in 2021, share price has more than halved, hasn't it? From 540 down to 240, and the weekly chart looks pretty So weekly chart looks meh, but the daily chart did pop up onto my screen the other day because the share price got to 260, which was a 7-month high. Briefly got to the 7-month high, but then fell back. So share price looks like it's still going sideways, but because the share price did get to that 7-month high for a brief period, it popped up to my screener, and that's why I was thinking about Integral Diagnostics when I saw this particular announcement. At this point in time, I'm no interest in this chart. If I do see the share price get above 260, that would be a good sign moving forward. I think that's one of the reasons why I did put this company. No, I haven't yet. Haven't put it onto my watch list, but I'm going to do it now. And that is the top 5 announcements of the day. I had one chart to look at, and that is the chart of DXN, because we have seen the share price drop today. So a little bit of selling today. I was waiting for the selling to come. I knew it was going to come, and it's come today. Down 13.7%. Just going to have a look at the summary. So no one's buying now. So last week, no one was selling. Now no one's buying. So we're just seeing a complete flip in sentiment. And the reason I say no one is buying is because the sellers have been driving down the share price. I've been following the movement in the share price of this company. So last week, no one was selling. So if you want to buy some shares, you had to buy into the sell bids. Today, if you want to sell your shares, you have to drive the share price down to sell into the buy bids. In fact, there was one sale today. So share price got up to 7.6 cents at 11.78, and there was one dump on market. So you can just see here, one dump at 12.26. Someone set the share price down about 10% in one trade, from 7 cents down to 6.3 cents, and the share price has not recovered, which again shows me there's no buyers at these levels. But buyers will come in because the share price went on a beautiful run on really good volume. Volume has been big again today, and I have a bid in at 4.2 cents. Well, no, 4.1 cents. I don't think it's going to be hit. I was going to buy at 7.2, then I with 7.2, yeah. Then I withheld my bid. So I just want to see some sign of support Maybe 6.3 cents is the low. So wait to be seen for DXN, another data center company. And they did released a really good announcement. When was that? The 4th of June, if I remember correctly. What other charts can we look at today? I'm going to have a look at this particular. We'll have a look at Technology One. Why not look? Let's have a look at Technology One. Actually, no, I had that comment, wasn't it? I had a comment from, would you be okay to share how to set up 3-month high in TradingView? I can do that for you now, nice 007420. I have a little bit of time on my hands. It's actually fairly easy. So you got TradingView. There's a little arrow, open panel right here. So open to panel with Scott Screener, Point Editor, Strategy Tester, Trading Panel, Scott Screener. God, Stock Screener, I have it open up to a 3-month high for the American market. So there's all these filters, and all I've done is symbol type, primary listing, new month 3 high. You can also filter it to other things, what you want. So 3-month high can be found down here. There's all these different highs and lows. So you have a new all-time high, 52-week high, current trading day, new 6-month high, new 1-month high, and then on the other side, new all-time low, 52-week low, 6-month high, 3-month low, 1-month low. So play around with those, play around with other indicators or other filters. So my filter is very lean, very simple. So just on the ASX and 3-month high. Some of my other screeners are a little bit more complex. And then for instance, this is the American screener, and we have NVIDIA. And it's also, I do list this by market cap. So NVIDIA is the first one on, and of course, an absolutely stunning chart. And then we have Broadcom. And one of the reasons I like this screener is you see breakouts when they happen. I want to sort of incorporate this with unusual volume. And we did see that with Broadcom. So this is a breakout for Broadcom 2 days ago. Chart before that looked absolutely great. We have Costco here. Chart looks pretty good as well. Netflix. Adobe, a company I do own, they had good results, and the share price went from being in a downtrend to probably breaking that downtrend on a positive announcement. Another reason why I don't mind holding these companies, even if the share price is in a downtrend, because all of a sudden they can release a good result. And I've come to a realization the American markets are really fickle, really, really fickle, extremely fickle. So Adobe, they released in March, they released a negative quarter. Share price went into downtrend. Now, in this quarter, they released a positive quarter. Share price has now rebounded, and sentiment has suddenly shifted back to positive. Extremely fickle, the American markets. I can't believe how fickle they are. Share price for Adobe, by the way, when they released the negative quarter in March, dropped 14%. When they released their positive quarter in June, rebounded about the same, 14.5%. And then you get stuff like, I'm going on a bit of a tangent here. I'm trying to think of a company that, I got a good one. Krispy Kreme. Donut. No, what's the Krispy Kreme? I'm trying to think of their drink code. It's DNUT. So this company on the 26th of March released an announcement that the market liked. Share price up 40% on that day. Share price went to $17.50. It's back down to $11.63. It was just like insane. Another one is Spotify. They released results that the market didn't like, and not Spotify, Shopify. Market didn't like it. Share prices rebounded back up. Now I've taken advantage of this. So share price of Spotify. They released the results in 8th of May. Share price dropped almost 20%. Share price is almost back up to where it was before that day in about a month. Now I have taken advantage of this. When a company that I want to buy releases results that the market doesn't like, then I will take advantage. I did this with Meta Platforms. I wanted to take a position with Meta Platforms. So on the 25th of April, they released, it must have been the results. The market didn't like it. Share price dropped 10.6%. Share price has not only recovered, it's now higher than it was before that announcement. Yeah, it's just perfect buy the dip situation for Meta. And this comes after they released their the quarter results before that. Share price rose 20%. It's just so fickle from one quarter to the next. The reasons why the share price might rally 20% or fall 20% is based off missing expectations by 0.001%. I've seen that. They miss expectations by such a small amount, and then the share price drops 20% or rises 20%. It's just insane. Yeah, it's just ridiculous over there. Anyway, I'm hoping I've answered your question nice at 007420. Play around with the stock screeners. I always have to be careful when I say that. I want to say Scott screeners for some reason. Anyway, stock screeners, and I'm playing around with it. And I do like this particular screener. Also look at 1 month high, 6 months high, unusual volume screener. Also have a buy the dip screener. And also, what else do I have? Unusual volume, 1 month low filtered by the dip, 6 month high, uptrend, 1 month high, 3 month high, most capitalized. I think some of these are standard ones though. I think most capitalized is not one I've done. And volume leaders, top gainers, top losers. Yeah. Now, that's all I have for today's video. Hope you've enjoyed it. Hope you have any questions. If you have any questions, any thoughts, any comments, leave it in this particular video and I'll answer them. Potentially, your comment, actually, that's what I could do. A comment of the day or question of the day. And maybe I can do that moving forward to answer some of your questions and get ahead of myself. Anyway, so that's all I've got for today's video. If you have any questions, again, leave them in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.